Hi, it's Lee and welcome to the Tech Economist. Okay, may as well get straight to it. Margins were not great. 19.3% including regulatory credits, which were $521 million. On top of that, there was probably about another $200 million in subsidies. When we remove those, we're looking at around 18.1% gross margin on autos. Of course, since then, we've also seen prices drop further, so margins are expected to be lower again in Q2. They may even be approaching about 10% with these new price drops. But we do have subsidies on top of that and regulatory credits. We saw additional cost of goods sold from Tesla starting the 4680 lines in Texas, and it sounds like Berlin and Texas are still not producing great margins, despite nearing volume production. It sounds like the raw materials are still fairly highly priced, but supposedly going to come down, or are already, and the effects of those will be felt more in Q2, such as lithium. This is concerning, but this is also the nature of the auto industry. It is cyclical. Interest rates are high. The economy has an uncertain outlook right now and is affecting consumer confidence. It is tough out there for the auto industry, and it will likely get tougher. However, Tesla is still making profits even during these times and still has a large buffer of cash to carry them through these difficult times. The prices of the cars are getting highly competitive with the mainstream vehicles now. Each time the price drops, it makes that big a difference relative to the competition. Of course, it doesn't help seeing continual price drops for consumers who now think they can just wait for lower priced Teslas, which will reduce demand further and thus prices and become a self-fulfilling prophecy. It sounds like Tesla are willing to keep reducing prices even if there is no profit, which may very well be what happens, especially if the recession actually worsens, which it may very well. But according to Elon, they want to get the fleet out. Even if they aren't profitable now, they will make it up later on superchargers, insurance, and when FSD is solved. And yes, Elon once again said FSD will be solved this year. It sounds like a lot of the entire company is riding on FSD, and Elon even saying once again there will be an over-the-air update and it will massively increase the value of the vehicles. But I think we are a long way from there still, as impressive as it is already. But a lot of investors are happy waiting until 2030, when most likely so much has come along by then. It's not easy waiting that long, and seeing the stock go down so much, so many times over that period, but that is what investing in high growth stocks can be like, just like the wild ride Amazon investors have had. Yes, Tesla felt like the Apple of autos, and the stock price looked like it might have had a similar pattern and just keep rising, but Tesla may end up being more like Amazon for a while, or many other tech companies that have minimal profits or losses, in the hope that their technology is scalable and profitable because of Wright's Law or Moore's Law or whomever came into play. Tesla is not just a car company though, of course, and a lot of investors are looking for salvation for energy storage. And I thought the amount of energy deployed this quarter was quite good, almost at 4 gigawatt hours, or actually over 15 gigawatt hour a year run rate. The majority of that is coming from Lathrop, which means it is about at 1/3 capacity already. The margins are still about the same as last quarter at around 11%, but we did get guidance as to the future of the margins for energy, and we were told to expect around low to mid 20% margins, similar to what Tesla want for autos, which was a bit disappointing as there was a lot of hype for energy hitting 40% margins. On top of that, the narrative that energy will be bigger than autos was also squashed, in that it will not be as profitable as autos, but it will require more gigawatt hours deployed and is bigger in that sense. I believe it was AutoBidder that got people's hopes up about energy being more profitable. However, the equivalent for autos would be FSD or robotaxis, which numbers would be difficult to beat. The positive side is that energy is ramping, it just doesn't appear to be as profitable as many were speculating. But those profits did seem particularly high, especially when the barriers to entry for energy storage are not as major as a volume production EV. But if Tesla keep accumulating LFP cells, then they have somewhere to deploy them which still has enough demand, if they don't want to use them for vehicles. There were so many questions on demand and margins, as it is obviously the biggest concern on every investor's mind. However, I was surprised that no one asked Tesla if they're considering advertising to try and boost demand, especially considering how much that topic has been discussed lately. But the only real answer we got around margins and demand is that Elon can't see the future. Tesla will continue to lower prices and increase market share if necessary. No one asked any questions about the actual future of Tesla and where it is headed. They all seemed too concerned with the now. No one even asked about Mexico. I was thinking we might get an idea of when they will start to break ground, or at least someone would ask, and potentially when that factory might hit volume production. But no one seemed to care at all. We were told that the Corpus Christi lithium refinery factory would break ground in Q3, but that factory won't be doing much for a few years, I'd imagine. Tesla need to make a lower-cost mass-market vehicle to increase sales. The word is that we're expecting about 4 million a year of these Gen 3 vehicles, or triple the current run rate. That's a big jump. Especially if the economy isn't great or interest rates are high, it's going to be easier selling lower-cost vehicles than higher-end vehicles. And of course, the tax credit and subsidies help tremendously. Although very little was mentioned about Gen 3 vehicle, other than the fact that Tesla are calling it the Robotaxi, which apparently is also what all other Teslas are too that have hardware 3 or above. So whether the Gen 3 vehicle is specifically designed vehicle for robotaxis, or it is perhaps a van or compact that can also be used as a robotaxi is still unclear. It would be nice to know what exactly that vehicle is going to be and when it will be revealed. No one wanted to ask about that either. There was no mention of the Model 3 Highland or how it reduced costs and restore margins somewhat. You would have thought that Elon would have wanted to reassure investors that they were doing what they can to get costs down and what to potentially look forward to in the future. At least it sounds like things are on target for the Cybertruck, and we'll finally see that in production. A lot of people still doubt that this vehicle will ever make it into production, so seeing it come off the line will be good for the company. Although it will likely be another cash furnace as the factory starts to include its costs in the cost of goods sold rather than capex, and Elon is saying it will ramp slowly. Basically, all my concerns I had around the end of last year seem to be coming into fruition, and the rest of the market is catching up to my realizations. Prices have to come down when the product costs more due to rising interest rates. Consumer confidence is down and supply is increasing. This is going to affect margins. However, the fact that the Model Y was the best-selling car in Europe and the US, excluding pickup trucks, shows that it is a very popular vehicle and clearly does have a lot of demand. And when the auto market is stronger again, it will likely do well. At the end of the day though, if you believe that BEVs are the future, then Tesla is still so much further ahead than the rest like for like. And the same for autonomous vehicles. As tough as it might be now, or over the next year to watch Tesla's profits potentially dwindle further, it's likely temporary. And one thing we should have learned by now is that sentiment is very fickle. It can change in an instant. For example, we could see some disinflation coming, which will make people hopeful rates are coming down. I've been down this rabbit hole already and been analysing it thoroughly all year, trying to think long term, and realising that a lot of what Tesla is doing is just going to take a long time. But it takes only one breakthrough or one area of the business to bubble again, and I discovered that there are a lot of reasons Tesla could hit even $1,000 just over the next 5 years. Tesla has never been an easy investment, which is why it has a significant potential payoff. Thanks for listening. Please hit the thumbs up and subscribe. You can follow me on Twitter and talk to me on Patreon.